Hi everyone, welcome back to the channel. This video is a part of the monthly portfolio update series made for the individuals invested with me on Etoro. During May, the portfolio was up 0.78%, and for the year, we're down 6.81%. We are invested in KWeb, Alibaba, Cardlytics, Warner Bros. Discovery, Paramount, Tencent, and VF Corp. Let's start with the worst performing company in our portfolio, Paramount. On 12 June, we got news that Sherry Redstone, the controlling shareholder at Paramount, had refused the deal with David Ellison's company, Skydance. Although the market clearly did not like this news, I think that we as Paramount shareholders are better off because of it. Paramount did not formally release any details about the Skydance deal, but as per various news outlets, it was an extremely complex transaction with Paramount shareholders possibly facing dilution. So far, this news has not impacted my reason for holding Paramount. I'm invested in Paramount because I see it as an attractive buyout target, trading for less than the value of the assets that the company controls. We still have other parties such as Apollo Global, Sony, and a few individuals in the media space interested in pursuing a takeover of Paramount. Over the next 6 months, I'll be watching out for signs of a buyout. If it becomes abundantly clear that Sherry Redstone has no interest in selling the company and intends on managing the growth of the underlying business by possibly hiring a new CEO or whatever, I'll likely reduce our position because I sincerely doubt the competence and the ability of the management to deliver any sort of value to shareholders. Paramount has been mismanaged for a very long time, and the current management is solely responsible for this mess. This company is purely an asset play in my opinion. We will likely see better results over the next 6 months since this is an election year, and earnings will be positively impacted. But I do not view Paramount as an attractive long-term investment as long as Sherry Redstone is the controlling shareholder here. Going back to our portfolio, Alibaba is in the midst of the ongoing 618 shopping festival, which will end on 20th June. In preparation for the 618 festival, the company has overhauled key features on the Taobao website, making it easier for customers and merchants to transact. Additionally, they have issued consumer perks such as coupons and logistics subsidies for merchants. The overall theme in China is to promote consumption, and Alibaba is at the forefront of this agenda, so we can expect record growth from the company. If we track Western retail companies, they are showing increased growth in earnings, specifically in China, and many of these companies have partnered up with Alibaba. A key example of this being LVMH deepening their partnership with Alibaba to boost sales. The chairman of Alibaba Group, Joe Tsai, stated the company's goal of reinstating double-digit growth in the core e-commerce business by 2027, and I think they are well on their way to achieving this target. In addition to the growth targets, the company has been extremely focused on returning capital to shareholders through a combination of buybacks and dividends. As of March 31st, the company has brought back shares worth $12.5 billion and will pay out dividends worth $4 billion. We are shareholders in one of the most dominant global companies that is undervalued due to sentiment. The stock price is completely detached from fundamentals due to pessimism. Over time, as we see signs of growth in the cloud and core e-commerce business, I believe that our patience will be richly rewarded here through a combination of growth, multiple expansion, and cash return to shareholders. Going back to the portfolio, we do have a new position, VF Corp. The company caught my attention back in October 2023 when there was news that Engage Capital, an activist fund, had taken a position. So far, I've held off investing in the company because I was waiting for a clear indication that the turnaround was possible. In the most recent earnings call, the CEO, Bracken Darrell, clearly stated that a brand sale was going to be announced within the next few months, and that they were starting to see growth in key sectors of the business. Additionally, Lululemon's former chief product officer has joined Vans as global brand president. Top talent does not go to struggling brands unless there's a clear scope of growth and development. As this is a turnaround situation, I've just made it a 5% position and would definitely be open to averaging up as we get confirmation that the business is improving and that the risk of solvency is meaningfully lower. So far, so good. That's it from me for this update. If you have any questions, please share them in the comments. Else, you can message me on Twitter or on Instagram through the links in the description. Thanks for watching this update. Take care.